All right, welcome to another episode of Not Investment Advice. We've got the NIA boys here, Trung Phan, me Master Flex himself, and we got Jack Butcher, founder of Visualize Value, and as always, I'm Bilal Zaidi. Boys, this has been a big week. As you can see, I'm not in my normal office. I'm in London. We'll talk about that in a second. But it's been a crazy few days, crazy 24 hours to be precise. We're going to talk all about Dotcom, the lunatic himself, what's been going on with the Terra ecosystem, the UST stablecoin losing its peg. That has really sent ripples through the crypto world, from the DeFi world all the way to Bitcoin. So we're going to explain that and try to figure out how much of a Ponzi it is or not. And then we've got some a widening of the discussion, the tech meltdown that's been going on. Some really good stuff from Trung on how the downturn this time might be different to the Dotcom boom and bust. And then to close it out, we're going to talk about NFTs a little bit. Our boy Jack's going to be talking about people dumping their NFTs. And if we get to it, we're going to talk about electric cars because, Jack's a fan. So
we have to talk about electric cars because I know nothing about cars. Jack is a huge fan, but I will defend Tesla to the death because I'm such a freaking reply guy.
It's all good. Yeah. Well, you both. Wait, Jack, do you actually have an electric car or?
No, so I got a loaner this week. So this is my first time driving an electric car. So I just want to.
What kind of electric car? A Porsche.
It's a Taycan, yeah.
Yeah. Oh,
that's
what Bill Gates pushes. Bill Gates pushes a Taycan.
He pushes a few things, but anyway. Yeah. So all right, and Trung, you're gonna kick it off for us with meme of the week. What we got this week, mate?
All right, so this is not about us losing all of our bags, which is definitely happening. But this is from Lit Capital. For the listeners, it's one of those starter pack memes, but this one is called the British Finance Dude at F1 Miami Grand Prix Starter Pack.
How accurate is this, Jack? This is hitting on the nose right now.
Yeah, not in any circles that I've been a part of, but it definitely seems like a legit.
Been there missing a flower shirt or two, to be fair, but yeah,
okay,
let's read that.
You guys tell me what the joke is, because you guys are the resident Brits here. So obviously, for the listeners, the first joke is the words "mate" in quotations. So mate, obviously that's said a lot. I get that. What about this dude with the hair? Is this representative? Is like really nice hair? Is that a thing?
Yeah, it looks like a bit of a.
Yeah,
how would you describe that?
I think the shirt is my favorite. What the haircut? I don't know. This like a 200-pound haircut, right? That's supposed to look like it wasn't a 200-pound haircut. I think that's the idea.
Yeah, that's it. That's it exactly.
This one in the bottom right. It's bloody hot.
Yeah. The shirt is my favorite.
For people who aren't watching, Trung, you want to read out one by one or like a few of your favorites?
I'll read out a couple of them. So Lit makes fun of the Brits by saying Carbone on the beach last night was, the Italian fingers. What is Carbone? Is that what is that?
It's a restaurant.
It's the restaurant. Yeah.
Let's just do what? Let's do kill me.
That vodka, that penne alla vodka life. Yeah.
Yeah.
That's what it is. Yeah.
Oh wait, what an absolutely great overtake by Russell. That is such a British line to me. And this one killed me. See you in Monaco later this year. I'll be docked in the marina with the lads.
It's pretty accurate, mate. Pretty accurate.
Is this you guys? Was this you guys? Were you guys ever F1 British guy? Was it ever you?
I think this is more aimed at the financier class, mate. Out on the black Amex expense card, courtesy of JP Morgan. I think that's who's being taken aim at here. Yeah.
There is definitely an overlap with the can media sort of guy life.
That's true.
I feel like you might have been a bit of your background there. But little Ferrari life.
I went to an F1 race in Austin, the second US Grand Prix in Austin with a brand that was competing at the time. And safe to say, my worst hangover of all time, standing 15 feet from an F1 racetrack. Recipe for a terrible day out, that is, boys.
Can you give the listeners of single or pre-married and kid Jack, what were you consuming the night before? How much alcohol? In what quantity?
Wasn't this recently?
Nah, this was 2000. probably 2016, 17.
Okay,
I don't know.
got it.
A few years ago. Yeah. Very poorly behaved. Just late nights out, mate. Just enjoying the festivities.
Celia,
Definitely.
listening. Oh, happy Mother's Day to Celia, by the way.
That's
Happy
true.
Mother's Day.
Yeah. Happy Mother's Day to everyone's
Happy
mums.
Mother's Day to all mothers. Yeah. And that's another thing. Why they do an F1 race on Mother's Day.
Yeah, great point, man.
I did have an outside shot at going, but you can't be leaving on Mother's Day. You know what I mean?
Yeah, you
That's
get
a
in
lot,
trouble
that's
with
a
that,
lot of marriage capital you're spending to pull that off.
You got to
Add that to the tally.
over-collateralize that visit.
Yeah.
Well, speaking of over-collateralized, I think
This
that's
is
a
a
great
great
segue.
segue. Great, Jack the Segue King here. All right, so let's get straight to this. I will actually share one more bonus. It's not really a meme, but it's a tweet of the week, really. Let me just quickly share my screen as well. This is from our boy Greg that kind of summarizes what the hell's been happening with Terra. So can you guys see that? Okay. Yeah, so it says, what I've learned today, 1 Bitcoin equals 1 Bitcoin, 1 Dogecoin equals 1 Dogecoin, $1 equals 70 cents. I think that was a perfect summary of what the hell's been going on. So for people who haven't been following, the summary is there's a stable coin, an algorithmic stable coin, which we can explain what that is in a second, called UST, which is part of the Terra ecosystem. We've talked about that before. It's a top 10 by market cap cryptocurrency, and there's basically something called UST, which is a stable coin, and there's something called Terra Luna, and they basically work together. And the point of it is that $1 is supposed to always be $1, and the summary is that didn't work in the last few days, and it's happened before. The peg, as it's called, has dropped to like 90 cents or something like that. But yesterday, I think last night when we were texting about this, it got all the way down to 65 cents on Monday. We're recording this basically Tuesday night, and this will come out on Wednesday. And at the same time, Luna, the token that is what's called the shock absorber, dropped by 50% to $30. And if you guys, we've talked about Terra a little bit before, and Do Kwon, the guy who started it, he's been buying up like $10 billion worth of Bitcoin. So this obviously is going to cause ripples throughout the ecosystem. And specifically with Bitcoin, there was Bitcoin sell pressure, essentially. Bitcoin dropped 10% as well. We can't say if that's directly related only to that, but I feel like it probably was a major catalyst anyway. And as of Tuesday, UST is back to 90 cents. But again, it's not, when we were reading this earlier, when I was reading this earlier, it was still at 90 cents. So this is a big deal. Did I miss anything else out there, boys?
I'd add two things. So Terra is a layer one. It is like an Ethereum, right? So we have to, that's just something conceptually for the listeners to understand.
Yeah.
The other thing I'd ask is this, because you are DeFi Bilal, and we joke about it. But Bilal, can you tell the listeners, as an avid user and tourist in the DeFi space, why is it that a stable coin is interesting and important? Can you tell?
Yeah, great question. So, and just from what I know, I also actually did recently in my consultancy work, a project on stablecoins, and it was about the likelihood of regulation. So I did a little bit of research on the 4 main types. So if you think of an axis, there's centralized versus decentralized, and then there's collateralized versus under collateralized, right? So if you think of the most popular one, or there's basically Tether and USDC. USDC is run by Circle. Terra is another one. Those are supposed to be, I've got $100 million in the bank in, real US dollars, in
or
fiat money,
or gold
or treasury.
Or
yeah, exactly. Some sort of collateral. And now we can issue that into digital dollars, right? So that's a centralized one like USDC. A decentralized one, similar to that, is DAI, or from Maker. That was the original kind of white paper that set this all off. That's technically kind of like an algorithmic one, but people are able to go on there and put Ethereum to any other collateral, and they can basically burn and create DAI. And then kind of fast forwarding to Terra, what they do is a there wasn't anything backing it. It was apart from the Terra or the Terra Luna in the first place. So basically it was an algorithmic stablecoin, and the design of it was such that when the peg starts going down, there's an incentive for someone, if it's 97 cents instead of $1, so a quick actor could come in, buy that up, and eventually that demand will then raise it back up to $1. That's kind of my understanding. If I'm wrong, you can correct me in the comments.
Perfect. I think the axes is such a great point of describing it. So the ones you did mention, Tether and USDC, so those are stable coins, and they are ostensibly collateralized by assets.
And though Tether is, there's debate as to how much they actually have, but USDC seems pretty legit from what I've seen.
Right. So the collateral point is very important. Can we ask you this? Why is a stable coin important?
Yeah. So the reason is because it's an on-ramp into the crypto universe, right? So most people are still obviously using fiat dollars or pounds or whatever. And when you want to go and execute some of those trades, or you've got money sitting on the sidelines, you put that into whether that's your Coinbase account, Gemini account, or the decentralized, DeFi platforms. And you're often holding that money, and then you're deploying that very quickly into, whatever you're trying to buy or whatever. You can also do all the fun DeFi stuff like lend it out and all that sort of stuff that you can't do with fiat money. You need to have a digital crypto version of that. So it's kind of like quite an important part of the whole ecosystem. And then specifically with Terra, with UST, people were being paid basically 20% to hold that. So if you stake it, you put your money in the Anchor protocol, it's called, you're basically earning 20%. It went down to 19.5 and now it might have gone down to 18 or something. I've forgotten the numbers, but there was a plan for it to slowly start going down. And that has been a huge kind of reason people have been holding that instead of, putting it somewhere else or keeping it in their bank account. So I don't know if that answers your question.
Stablecoin is important because if you want to operate in the crypto economy and you're a fairly new user, or even if you're a veteran user, you don't want this crazy volatility, right? You need something where you can trust and make decisions, believing that $1 equals $1,
exactly.
1 Terra equals 1 Terra. Okay, so what I'd add to that is a second thing is the decentralization aspect is very important, right? Of the pitch, like a lot of these crypto evangelists and people that truly believe in the decentralization power of crypto are like, a decentralized stablecoin like Terra is, UST, is particularly important because it's the ethos of decentralization, right? Whereas Tether and USDC, they're run by centralized organizations. So you have that a bottleneck and potential weak point. And the other related point to that, and it goes back to Jack's joke about over collateralization, is that when you are trying to maintain a peg, to give confidence to the world that you do have to kind of over collateralize. So you might have, let's say the entire asset base of your stablecoin was $10 billion. I think Terra is $18 billion. But for people to believe that, you might get way more than $10 billion because it's such a confidence game, right? And that makes it quote unquote less efficient. So I'd say those two things. So Terra is supposed to be quote unquote decentralized. And then by being an automatic, algorithmic stablecoin, it is truly decentralized, right? It runs on a protocol, runs on a coding program. Okay,
but the thing is, so just to clarify though, on the algorithmic part, again, there's kind of debate as to if DAI, the maker, which was kind of the original one in this space, they are definitely decentralized. So they're not like Circle's USDC or Tether. But they are also, from my understanding, that's also collateralized though. Again, I could be completely wrong on this, but so you can be both decentralized and collateralized. And
you said, it's a spectrum, right? It's a spectrum.
Exactly. Okay, and then the other thing I'd say is the closest thing to this is back in the day, we had the gold standard for the dollar, sterling had silver. And you could argue now, because we don't have that, the dollar is not collateralized, right? In the same way it was in the past. You could argue it is through other means. But anyway, back to what you're saying.
So what I want to add was this, and you brought up such a good point. So for the listeners, now we got to the point, is like, okay, what is actually the value of UST, right? And this goes back to something we talked about, was it last week with SBF, talking to the Bloomberg people? Yeah. He basically was describing the magic box situation. Terra really is specifically making the world believe that this thing is worth something. So there's just where the Ponzi-nomics comes into play, right? You mentioned a 20% yield. So I actually listened to a podcast, I can't remember who was on it, but they're explaining, if you think about that yield as actually a marketing expense, right? Because they're trying to pull people into the ecosystem.
Was it NIA? I think we talked about that as well.
It wasn't NIA, unfortunately. But, so there is Ponzi-nomics to it, but as with many of these crypto things we've talked about, you have to kind of Ponzi your way into mind share and value, and then start building the other ecosystem around it. We talk about Axie Infinity all the time, right? It's like Ponzi-nomics, but can they build a real world and real game out of it? So what Terra is doing is they're attracting everybody to Luna and UST. The yield is a big part of it, but they're offering other items, right? Don't they have something? So they're offering, obviously, the DeFi protocol, Anchor. They're offering something called Mirror. What does Mirror do? It's an ecosystem.
I don't know enough. Yeah, they've got lots of different parts of it. I don't know all the details.
So they're trying to pull people into the ecosystem and prove that they have value around it. But the atomic unit, what they're trying to do really is, in a way, a Ponzi scheme. They are getting everybody to believe that there's value in this stable coin, and they're offering a big yield to make it happen. The Bitcoin piece is very interesting, and Bilal's the one that brought it up a few weeks ago. So they actually went out, and Dotcom, the founder of Terra, said, we're going to buy $10 billion worth of Bitcoin. And now what he's effectively doing is kind of seeing the algorithmic portion of the stablecoin. That's probably not enough to be the long run solution. We're getting something hard, right? So they're collateralizing it with Bitcoin. And as this peg broke yesterday, they lent out $750 billion in Bitcoin. And why they lent it out was they're lending it to people to buy into their ecosystem. So obviously a lot of self-dealing and circling, and call it circle jerk if you want, but like a lot of that going on to try to keep the confidence in the asset class. The last thing I'll add here, because I love also Jack's take on this, is this is Dotcom's, we joked about it, but Dotcom's 2 tweets as everything was blowing up. Yesterday, he tweets, deploying more capital, steady lads.
That's so funny.
This morning, he goes, close to announcing a recovery plan for UST, hang tight. And then he says, that didn't mean to be so quiet, staying laser focused. So the thing last thing I'd add is this. Bilal said it's at around 90 cents at the time of this. The whole thing could collapse by tomorrow, to be honest, because these things go to death spirals.
It's already been so much money withdrawn from Anchor Protocol. And there's an argument to say that the people who are waiting are basically waiting for it to go closer to $1 as possible and then withdraw. Exactly. But there's a risk for them because if they basically take that out and send it to Binance, like right now I was just reading Binance, they had paused or, you can't do trades on it or something like that. So you're kind of like screwed either way by this point.
100%. Well, look, Jack, what was your take on this? What is your perception? Because we've just been verbal spieling here.
I think you guys got all of it. My only addition, I think basically the big arbitrage opportunity for somebody building an ecosystem like that is like, if you have that amount of capital, I think the bet is like your investment in the ecosystem at large is going to be big enough it's kind of like the Elon thing, right? It's like the ability where you buy $10 billion of an asset, you make so much noise that asset appreciates in value more than the 10 billion or 100 billion that you deploy because the noise that comes from your purchase. And then that's like creates a tailwind for you to make this thing off the back of. But maybe I'm being reductive, but like all of the algorithmic and like all of those like buzzwords that are layered in there, it's like, again, it feels like you're overcomplicating the idea of like there's more money in the system than is coming out or vice versa. Like if that scale tips and you don't have the resources to either like persuade, and in this world, like persuasion is it seems to be all downstream of capital deployment, right? It's like if you have the ammunition to change the attitude of the market, then you can defend the peg of your coin or your protocol. If you don't, then you can't. And like Bilal said, how much trust has been eroded and how many people are just supporting the narrative up to the point they can exit because they've now seen like the risk that comes with that. Right. But I think it's like more of a like physics equation at this point, right? It's like, does this exist or not? Like, does the collateral exist or not? It seems like everybody's in agreement that it doesn't, because it's not at $1, right? But there's some level of hope being held out that it can be defended. But I think the entire market the entire sentiment of the market has to change for it to get back up there. So I might be a complete rube here and like reading trying to come up with a plan to defend the UST, other than like, hey, we've got $100 billion that we're going to like put into this thing. I don't know what any other plan is, right?
Yeah, great point.
Another tweet. Hang steady.
Yeah, he wrote, the last thing he wrote was, like you said, it was close to announcing a recovery plan for UST. Hang tight. That was 4 hours ago of recording this. Didn't mean to be so quiet. Need razor focus to deliver. Thanks everyone for the support. It's been quite interesting to see. I mean, there's a few accounts I follow that I know. I think, Jack, you shared Route to FI, which is financial independence. Have you seen some of his threads? Trung, you might follow him as well. Actually, really good, right? He does a good job of like showing very detailed stuff, especially in crypto. And he wrote a whole thread basically saying like, sorry, because I've shared, obviously we always say do your own research, etc. But he felt bad because he had like been pushing their stuff in the past. I think genuinely like he was sharing something he found that he thought was, useful. The same way, Raoul Pal, whatever, has been talking about ETH for the last 6 months and it's been dropping like anything. So I don't think he was like necessarily in the wrong or anything, but it was quite interesting to see even people like him and other people I follow kind of being like, wow, this is a really big deal, because it has happened before. But not at this scale. Like, it's so much bigger this time, and because of how much it has an impact on all the rest of DeFi. And obviously there's so many people getting liquidated. I was reading some of the comments, people saying it went down to 29, I was holding till 30, 29 is where I got liquidated, and then it has all this knock-on effect on all the other positions you're holding. So yeah, this is definitely bubble goes pop sort of moment. But yeah, anything else, Trung or Jack? I know Trung's been listening to the pods on this.
Yeah, it's worth bringing this point up. I think Jack makes such a great point. I looked into trying to figure out what this algorithm was. It had to do with burning Luna or creating Luna based on what the dollar was at relative to Terra and how Terra was moving. So a lot of, like you said, black magic going on behind the scenes. And to Jack's point, at the end of the day, do you have collateral or not? Because the collective belief can make everything disappear, right? We've talked about this a lot. And so to Terra's credit, UST has been about a year and a bit. They've gone through choppy battles. This is by far the biggest battle it's been in. And people are seeing the redeemability of UST is not $1 for the longest period. It's dropped to 60 cents. Which is incredibly difficult to stomach if you're in that ecosystem. But having said that, they're at 90 cents now. Bilal said, maybe some people trying to get that final bag, right? Potentially. But it seems like it's in a lot of people's interest, including CZ at Binance and the Binance team, because they're obviously involved in this. There may be some quote-unquote self-dealing. I don't know. But the collective belief is such an important part. And what makes it with all of these, anything in the future, whenever you hear algorithmic stablecoin, realize it's not going to be collateralized. That is the entire point of it. If they're saying that they can do it without the collateral because it makes it more efficient. But the problem is this, it's such a massive assumption. And right now, if all you're depending on is demand, which is based on belief, right? So demand based on belief, or a 20% yield, which is the other part of it. If that demand goes, it's game over, right? So there's a couple of ways you can lose demand. It's not just the yield. Bilal, you said the yield might be dropping already, maybe 18, 19%.
Yeah, they had it like, transparently shown that over time it'll go from 20 to 15 down to 6 or something like that over several years.
The yield is not going to be enough to pull people into the ecosystem anymore. So again, if we take the yield as a marketing expense, they're going to have to start doing things to keep people within the ecosystem. Why am I going to keep UST? Can I spend it? Can I invest it? right?
So
They're doing all these things. They're trying.
The only thing I'll say, and this is referencing our boy Mario from The Generalist. He did a long, deep piece on this. And the one thing I remember was saying that this is their kind of several year roadmap to get them time to basically sell through the other benefits, what you're mentioning. And one of the examples I always shared, probably on this pod, was they had convinced the equivalent of like Disneyland in Korea and Nike and others to be using their version of the dollar or their stable coin and their, the local currency version, because the fees were better for the merchant. So that was already like, okay, utility, there's a reason for you to use this over the fiat money. So that could be a legitimate plan, right? Like, bring people in, invest, and then we'll get people ramped up on that side, and then people just using it, so that, I don't think that's necessarily like a plan to rug. Completely.
It's a credible business model. I think not credible in the sense that, be a Ponzi scheme, but like Jack said, Elon deployed this essentially, right, to make Tesla happen. He created collective belief and was able to tap equity markets for it and had cheap cost of capital to basically drag Tesla into existence. Now, Dotcom is not Elon Musk, so that's the problem here, right? And Terra hasn't been around as well. It's tough, man. We talk about this all the time. It's a meme. If Dotcom pulls this off and survives this, it just strengthens his meme, right? Like, that's the other part of it. If a week from now we talk about, UST is back at $1, well, now people are like, wow, it survived a near-death blow. Maybe this is a stable coin that we can believe and trust that can find its way to this so-called algorithmic decentralization. I mean, this is a huge test. You survive these tests, right? Elon in 2018 was sleeping at the factory. That's part of the myth of Elon and Tesla. And he pulled through it. Talks about it all the time. The hardest part of my life ever. 100 hours a week, sleeping at the factory. I mean, these are the type of challenges that you build myths around. So I think it's fascinating, man, because so much of it is everything we talk about, memes, collective beliefs, and like it's all being tested in front of our eyes, and he's tweeting out steady lands.
Yeah, it's hilarious. Well, one question I was going to ask you guys, what you just said there, Trung, I completely agree, but I think you said something along the lines of everything's based on belief in this case, and the collective belief. I'm just thinking out loud here, but how is that different to Bitcoin in this case?
Well,
it's just on a longer trajectory. It's been around for longer. But
you're 100% right. Well, it's the stuff we talk about. Bitcoin has gone too big to fail, in my opinion. Now it has its tentacles are in too many places with asset managers, even just real finance and just individuals, right? It's like we talked about hundreds of times on the show. There are 10,000 people in the world right now that would sell their family for Bitcoin. That is the price floor, right? Legitimately, that is the price floor for Bitcoin.
Yeah, that's true.
There is not that for UST. Dotcom might do it, but he's one guy. Maybe his inner circle, but there's just not. I think that's the difference. So it's further along the line, but the principle itself is similar in terms of it's still based on a collective belief, like the way money is. I think you pointed out though, Terra is trying to use that same. Dotcom is trying to pull reality towards him, or just a future he wants, by offering, like you said, maybe working with Disneyland or the equivalent in Tokyo, in Korea, working with Nike. He's going to try to make utility out of the Terra ecosystem. But first, he really is just offering essentially what is a Ponzi scheme. Like the 20% yield is coming out of like their raise for the Luna, right? Like how it all launched. And 50% of that money has gone to insiders and VCs. That's the criticism of Luna. But I mean, if he can pull it off and he can survive this, it's very interesting what happens.
Definitely. Jack, anything else from you, mate? Thanks, Trung. That was a great analysis.
Stay tuned to Not Investment Advice for the Dotcom updates.
Got to get him on the show, man. I mean, I think he's a little busy right now, but definitely would be a good guess. All right. Well, listen, let us know what you think of that, because it's a moving target, as we said. By tomorrow morning, by the time this comes out, it might be game over. Who knows? Or he might be the savior of his little pocket of the internet. So it'll be interesting to see.
Do you use or interface with Terra or Luna?
I haven't used Anchor, but I have had Terra and I have sold it in the past.
I have.
You still got some?
I don't know. I'm looking right now.
You riding it out, mate. You ride or die on this one.
Yeah, I think I got I was just playing around with Anchor when it first came out, so like a nominal amount just to try and figure out how it all works. But yeah. Nothing crazy. But at the same time, the 20% yield, you know, unfortunately, the cliche, if it sounds too good to be true, it probably is.
Yeah.
There was definitely some of that tingling back there, you know. There was a great meme Ramp shared yesterday where, did you guys see that? Where there's a guy on TikTok who's like, I'm buying this house in Florida. This is the down payment, and then this is what I need to put in the anchor protocol for the yield to pay the mortgage every month. Mental, obviously a very high risk strategy as it was. But the other thing I think this doesn't take into account is like that yield is, you know, we've already covered it. I'm not going to go there. It's like that's dependent on this protocol existing into the 30 years of the future of the responsibility that you just signed up for, which is obviously a long bet.
Completely. Yeah, and this is old school, you know, just what we look for when you open a bank account in America anyway, and the UK, you get, what is it, FDIC insurance?
Yeah, 250K.
There you go, Trung.
That's like,
Trung loves it.
Giannis Antetokounmpo, the Milwaukee Bucks superstar, I think he has 250K in 90 different bank accounts.
That's hilarious. I hope his wealth manager did that. Who's charging him 4% a year.
I want all that insured.
Yeah, I mean, that's what you don't get in a lot of these things. So, I mean, ultimately, people go into it knowing the risks, but the risks don't feel like any risks in a bull market. Now we're finally at the bear market, which we talked about on the show. You know, when I was FUD Bilal for a bit, this is basically, we're really there now. We're 50% Bitcoin, Ethereum, 50% of what their highs were pretty much. And so, as Jack just mentioned there, you know, we're basically going to transition now into what is going on in the wider space, because there's a tech meltdown happening. And you said the connective tissue here is, if it sounds too good to be true, it probably is. And so the last 10 years, the last 12 years, or whatever it's been of this bull run has been, you know, insane growth for everyone. Everything looks good up and to the right. You pick any stock and you're like, oh, I'm a genius because obviously there's going to be e-commerce in the world, so I bought Shopify. And then you think you're a genius. I'm talking about myself. Yeah. So and then we find out that interest rates play a thing, and it's a bit too late by the time it hits you. So
go on. Tell us, you were in the early phases, and what was it feeling inside Google?
I will say that there is a part of me, like, to break it down into two parts. One is, do I believe in this company? And then the second is the price right? So the first part is a lot easier because you can look at the market. You can, especially being inside, I can see stuff other people aren't seeing yet, or I'm hearing, you know, the conversation we mentioned in the past, the CMO of a public company saying we believe in the internet. Not the internet, or something along those lines. And so to me, that was a signal to say, oh, there's going to be lots of money coming down the road. It's not. And then you'd look at the landscape and you see the percentage of money that goes into ads. And now you can say the same for cloud, like Druckenmiller said, which we're going to talk about in a second. Right. So all that is on one part, but the part I didn't know anything about, and pretty much don't still, is the other side, which is the macro side, and what happens when interest rates goes up. What are 10-year treasury bonds? How does that have an impact on everything? What is inflation as impact on everything like that? And it's really annoying, but the boring answer is probably the best thing to do, is just buy every month, buy the boring S&P 500, and you're probably you can focus on creating stuff, making money, and living life with your family. And the rest of it is kind of a distraction. So, but I will say the last thing on the Google side, I did think you have an unfair advantage because you're seeing stuff that other people aren't. Right. So, you know, so you're still seeing, like I said, those conversations. Or when I was in Google, I could hear, you know, the big L'Oreal team or one of those, you know, big CPG brands saying, oh, we just lost a pitch to Facebook for 50 million. And in my head, I'm like, oh, okay, that I didn't hear that 2 years ago. So that gives me a signal that other people might not hear.
Did you ever buy Facebook?
Yeah, I had Facebook. I still have Facebook now, yeah.
Oh, snap. So you're picking up Facebook like as your shift is happening.
Yeah, because I could see, I was like, these guys have the best advertising. They have really good advertising, whatever. And it was a hedge. So I would sell some Google and then buy Facebook, Amazon. And that was kind of the spread a little bit.
Algorithmic trading right there.
Algorithmic trading, exactly, yeah. So just to tee you up, Trung, because you've been writing about this, and you know the wider angle here is, here we go. Here's a tweet. So I'll just tee it up.
Absolutely insane tweet. Go ahead.
So Nasdaq Damage, more than 45% of stocks are down 50%. More than 22% of stocks are down 75%. More than 5% of stocks are down 90%. And this is obviously just in the Nasdaq. But just to put that in perspective, 1 in 20 companies in Nasdaq has gone down 90%. That's shitcoin level of, decline. So yeah, over to you. But like, what the hell is going on here?
So those numbers you just said, the only time it's been comparable from the tweet from Jason Gopfer, who is a financial analyst, is .com. So October 2000, October 2002. And the financial crisis, November 2008 to April 2009. So, Trung likes to squeeze juice out of the Stanley Druckenmiller interview he did last May. And a year later, I'm still trying to squeeze as much juice as possible out of that interview.
So yeah, he was right. That's why. So you got to bring it up, man.
Literally, shockingly, one of the greatest investors ever, right? This guy broke the Bank of England, which is actually, we could talk about it. Sure,
with Soros, right? So for people who don't know, Druckenmiller.
He broke the Bank of England while working at Quantum Fund with George Soros. That's actually quite similar or comparable parallels to what's happening with Dotcom, Terra, and the UST. Whenever you have a peg, people try to attack it to see how much, like we talked about. The Bank of England had a European exchange mechanism, rate mechanism with the continent, and they said, we're going to make sure that all our currencies, in line with their currencies, like Germany's, particularly the Deutsche Mark. But anyways, the reason why I bring up that interview was he said a year ago, this is what he said. And he wasn't just me, he was going on a bit of a media tour because he's like, this is the most insane thing I've ever seen in my life, what the Fed was doing. So this was May 2021 when I spoke with him. A couple months earlier, he had written an op-ed in the Wall Street Journal. And he said, for the US government to be continuing to do pandemic relief when basically everything is back on trendline, jobs, the supply chain, producers, and corporate spending, but they're all like kind of back to pre-pandemic. The Fed was still pumping money in. He's like, this is going to end badly. This is going to end very badly. He said that a lot of people thought it, but he said it really straight. He's like, yeah, rate hikes are coming for sure. It's the biggest threat to the market. And then I asked him, okay, in May 2021, and this is when, a lot of these names we've all become accustomed to. I'll mention one of them, Shopify, talk about Zoom, talk about stuff like DocuSign, even like Salesforce, like a long-established SaaS company. These companies have all gone back to pre-pandemic prices. So Druckenmiller's whole framing was, well, if you look at .com versus today, what are the similarities? It was a ton of monetary expansion, but you can't even compare what was going on then versus now. In the late 90s, you guys want to know what the interest rate in the late 90s was when they cut it? It was at 4 to 5%. So we're at 0% now. That means the Fed has no more tools to combat like falling asset prices. But that was a similarity. So let me throw it back to you guys quickly with this is, when you hear that a company like Shopify or Peloton or Zoom, not only have they given out their pandemic gains, they're below what they were before the pandemic. Isn't that crazy to you?
That's wild. Yeah, it does. Well, the same way when we're in a global pandemic and the stock market hits all-time highs eventually after a few months, obviously not in the first month in March. That also didn't make any sense to me. So now I've just learned that the stock market and the economy aren't always hand in hand. Though right now it feels kind of close because we're halfway into recession pretty much, right? Like we had negative GDP growth. And it's, we're actually hitting this huge correction, or we've hit the huge correction, could get a lot worse. So I do think it's kind of coming around. Jack, what about you, mate? Anything else for you to add?
I don't really pay attention to it. I've tuned out. Ever since we talked about like, I'm going to stop looking at this stuff, I haven't looked at it. So
you got the discipline.
A little bit. It's a little bit, I hear rumblings of it, but I I'm not
Sorry to bring it up on a podcast every week.
No,
That's a great point.
A couple of the apps that I used to use, like I changed phones and I'm logged out of them, so I can't even get into them.
Oh, that's
so I just don't even look.
That's the move.
While they're putting your password in, right?
I don't even look, mate. The only thing I look at is the Shopify dashboard, boys.
There we go.
Back to building. Time to build.
Indeed.
All right, so that's a similarity, a little bit of late 90s exuberance. So there was, investment in equity market exuberance, and obviously in crypto, NFTs, everything, because of how much money was pumped in for the pandemic. But then a little silver lining for our listeners that might have some of these SaaS and cloud-based stocks. So Druckenmiller says, okay, at the late 90s, some of the biggest winners in that period were laying the foundation for the internet infrastructure, right? So Cisco System, networking company, Sun Microsystem, the same. Cisco actually became the world's most valuable company in March 2000. It had a market cap of 20 or 30 billion, and dethroned Microsoft. So
wait, did you say, was it 500 or?
520 billion.
Oh, 520, yeah.
So insane, right? And
that's ridiculous, yeah.
It's ridiculous. So Druckenmiller's point was, if you're an infrastructure internet company and you're building out the guts of the internet, he compared it to the 1850s when you're building the railways. There's only so much track you can build, right? And once you're done building that track, there's no more hyper growth. It's like the market has been saturated. So obviously there were other dot-com era companies that have survived, Netflix, Amazon, eBay being three of them. But again, Cisco was the most valuable company in the world at one point. The biggest winners, you could argue, were these infrastructure companies. So he's like, here's the difference with 2021, which when I spoke with him. If you have a re-rating of these SaaS and cloud stocks, which has happened, so the Bessemer Venture Partners Cloud Index, which is closely watched, has a lot of these cloud companies that we talked about, Adobe, Salesforce, Zoom, DocuSign, all those kind of companies. The forward 12-month revenue, forward multiple on revenue has gone from 15 times to 7 times. So it's been repriced. People are no longer paying these crazy revenue multiples. But then his larger point was, it's still very early for cloud adoption. I'll throw it back to you guys on this point. But he's like, my gut, he's like, it's still like a couple second or third inning in cloud adoption. A lot of it got pulled forward by the pandemic, but I mean, I have a quote here that I pulled and I saw from Google's cloud CTO, Will Granis. So the guy's talking his own book here, but he says that he thinks cloud adoption as part of enterprise into IT spending is only 15% at a max. And he says 20 to 30% of workflows are moved to the cloud. That's it. So we're, to his point, still second or third inning. And I largely buy that. I think there's so much enterprise spending left, so much moving to the cloud left to be done, that Druckenmiller's point is the markets for internet infrastructure fully saturated. These crazy cloud names and a lot that we touched on just now is like, man, it'd be hard pressed for me to say in 4 or 5 years that they're down hard, but are they reasonably within the range to fill the valuations that they were 6 months ago? I would say yes. Not investment advice.
But yeah, and I agree with that as well. But I guess the question comes back to what I was saying before, which was the two parts to it. One is this a growing company, growing industry versus the price, right? And you mentioned the multiple downgrade there, and a lot of that, from my understanding, is due to just growth. Basically people aren't willing to pay the same as they were for growth stocks or the multiple, and they reprice because there's other alternatives that are more attractive, right? That are safer, especially, the big, really massive funds who would rather just put money into something safe because they don't need to get, 20% returns. They just need to make sure they're preserving the billions of dollars they're kind of preserving. So I guess the question is, even if those companies do become, continue growing, become super valuable as we all think they probably will be, do we go back to that valuation in the future? And my hope is yes, but I don't know. Do you have any thoughts on that, given like how it's happened before?
It's just, do they have the tailwind? That's it. I can't say what that valuation was. Clearly, they got way ahead of their skis, and this question is probably very legitimate. But I think that is a big difference with Dotcom. Although the dot-com argument you could make also was like internet penetration was so low at the beginning of dot-com. But if you're not, if you're only talking about the infrastructure companies, then Druckenmiller's argument is very sound. If you're talking about the things that layered on top, which he didn't discuss, so I'm not assigning whether or not he made an assessment of those. And he famously lost like $3 billion in 6 weeks. So he talked about how he got totally clapped during dot-com.
How's his Bitcoin bet going? Do you know?
He bought at 12 and unloaded at 30. That's what he said.
Oh, wow. Okay. All right. So he did all right.
His heart was never in it, is what he said.
He's not getting the diamond hands name tag at McDonald's anytime soon.
Thread from Nathan Vasquez of Every. He talks about how basically this tech meltdown, because tech, when you melt down in the public market, it starts trickling down everywhere, right? Because all the venture rounds, they follow, it's a lag, because the seed round will follow the A round, the B, the C, D. So if there's no exit liquidity for these Series F, G kind of pre-IPO companies, everything starts rolling backwards. So apparently the Series B, C, D funding has really cooled, or term sheets are not as generous as they used to be. We've seen a ton of mass layoffs, right? Robinhood, this memo from Uber CEO that my college friend Deidre Boza was able to get her hands on, says that they will now focus on free cash flow. That's what Uber's CEO said, and they're going to cut non-essential marketing spend. So there's a lot of Facebook is on hiring freeze, so things like that, right? It's all trickling down, man. Wild.
Yeah, man.
What is non-essential marketing spend?
Probably crypto-related, Web3 related podcast.
Yeah, that's true.
Well,
that's unfortunate.
Well, you guys are both in the marketing space. If Uber CEO goes to your agencies, like, we're cutting non-essential marketing spend, what is the waterfall that's getting cut?
Well, I just think it cut, I guess brand marketing is where you sacrifice your dollars, right?
Yeah.
The longer term brand building stuff, and you just focus on the
performance
direct response. How much does it cost to get a person in the car? What's the strategy and the tactic to do that? Put all the money you're willing to spend behind that versus talking about Uber being the shepherd of humanity into the greatest era of all time, whatever.
Well, no more like an Uber sponsored Netflix series starring Beyonce. Like, that's out, right?
I would imagine they're going to slow down on that stuff. Yeah.
But and Trung, actually, to that point, in January 2010, when I started at Google, that we were still on the tail end of the recession. So I remember those conversations were still happening, where it took like a year and a half a lot of the time for people to cut their budgets anyway. Okay. And they were starting to just warm up again. And so back then, even there was a similar kind of, even internally, we had to reframe all the pitches and make it everything is about ROI. Everything we have an actual advantage at that time, because no one else was really showing you what your ROI was on your return on investment on your spend. So all the TV budgets, billboards, outdoor trains, all that stuff, they're just hey, get 100 million impressions, and we're here's 100 million impressions plus we ran it for a month and this is the amount of sales it drove, etc. So I think there's actually normally a general evolution of that happening anyway. After a while it gets quite frothy. We just had these massive Web3 crypto brand ads for Super Bowl, right? We did a whole episode on those with Larry David and the good old days.
Top, right?
That's got to be the top. So I think, I'm not to say that people aren't going to cut their Super Bowl ads completely, but there's normally that's the sort of stuff that often gets sacrificed in my experience as well. And a lot of the time those things go on sale, so the arbitrage happens, so those companies start buying it again, and they actually are worthwhile investing in as well. So the one thing I was also going to share is I'm just going to share my screen for 1 second here. This is from our old pal, Raul Pal, if I'm saying his name right. This is kind of wrapping up what we were discussing here. This is on S&P 500. But he said macro update, the SPX, which is S&P 500, right, is now very close to pricing in a near immediate recession. Below is 47 and signal usually expect growth to collapse. And then he kind of has a whole thread. I can share this in the show notes. Showing some technical stuff on charts that I don't fully understand. But essentially, it looks like we're very much within recession territory by this point.
Fud Bilal, vindicated.
Yeah, just real Bilal, keeping it
You
real.
actually want to know what's crazy? We had this conversation.
Yeah.
You and Jack, I remember this distinctly. It was probably last May when Bilal was like, what happens when the shit hits the fan? And oh my goodness, has it come fast and furious. It is wild.
I can't remember when it was. Yeah, was it May or maybe a little bit later? But I remember because, and to be fair, again, it's much easier just to talk about it because I could sense it's coming at some point, like everyone else. Like that old saying of, economists are always right for 10 years or whatever because they're always predicting a recession. And so I've messed up that quote completely. But, the sentiment I'm saying.
They predicted 15 of the last 10 recessions.
Yeah, exactly. Yeah. There you go. But again, I mean, just being completely honest, I didn't really change anything. I basically didn't sell. I didn't really cash out anything, but I did look at it and say, is there anything here I don't believe in long term? If so, I need to sell it or at least try to sell it. And most of my stuff is basically S&P 500, Ethereum and Bitcoin. So it's pretty basic.
Well, let me put something out that I think you alluded to. So Sriram Krishnan from Andreessen has been tweeting out since for a while now. Every time that he's seen a headline from the NYT or one of the mainstream medias asking when is the crash coming. So,
boss.
It's the point where we've been thinking about it for a decade, right? Here's 2011. Tech firm workers sell shares, fearing a bubble will burst. 2012. Disruption, looking beyond Silicon Valley's bubble. 2013, in Silicon Valley, partying like it's 1909 once more. And then same headlines all the way through 2018, when the bubble burst, consider the anti-bubble stocks. It's such a great point. We've been talking about this for a decade and it never came, right? So obviously it was the greatest monetary experiment ever, what happened after 2008 with the Fed. And they literally turned the dial to 11 with the pandemic. Man, I think we're going to be in for a while of pain, man. What I'm hoping is this. Let me circle back to Druckenmiller's point about Cisco, Sun Microsystem, and the internet infrastructure companies. Cisco never touched $505 billion or even anything close. It's a $200 billion company now. So it's lost, and that's inflation. I bet you did inflation adjusted. It's probably under $100 billion. So that's lost 80 to 90% of its value. I'm hoping these SaaS stocks come back because I'll have a lot of them. That's all I got to say.
A little snowflake in there, Trunk.
I don't have snowflake. Thank goodness, man.
All right. So I think everyone gets the idea here. We're not in a great place, but there's lots of memes to keep us entertained and to move us on to happier topics, people dumping NFTs. Jack Butcher, what's going on? That was a nice transition there. All right. What is going on, Troy? I think, Jack, you shared a thread with us, which was kind of alluding to this point. And just to place this for people, we talked about crypto, Bitcoin, Ethereum, 50% less, Terra crashing. A slight widening of that is the wider stock market and a recession. NFTs are the far end of the kind of, growth world, like high speculation world. Exactly. Yeah. So what's going on in that world, mate?
Can you pull up that thread on the screen share?
Yeah, let me just do that here.
Props to this man.
Give me 1 second.
Farmer. Big in the Bored Ape ecosystem. Actually bought one of my Bored Apes.
Oh, what a legend. There we go.
Yeah. This guy's...
Can you see it, yeah?
Great. Yeah.
So it was from the top.
Let's go to the top tweet.
1 sec.
So I think this is more of a commentary on the culture of shaming people for selling, the idea. And I don't even think this was specific to NFTs, his commentary, but we'll go on and talk about that. But posting screenshots and sell shaming people that are folding at a loss is toxic. Counterproductive, has no upside. You have no idea why anyone's doing it. Maybe they need the money or maybe they did get spooked, blah, 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 blah. And he goes on to talk about the psychology of the market. And then at the very end, I think this was a piece I really wanted to share, was Papa Farmer has been yelling at you to always have dry powder for months, and you're seeing exactly why that matters right now. Some of the conviction buys that will happen whenever we finally capitulate is what will create the legends of the next cycle. So I think people who have been through, 1, 2, or I don't even know how many it is now, 3, legit downward cycles in crypto, probably two really significant ones, are really familiar with the cyclical nature of this, right? And obviously, as we all know, the old trusted saying, buy when there's blood in the streets, right? Buy when there's FUD in Bilal's tweets.
Wait, hold on. I want to add one thing. I was corrected by a hedge fund friend of mine. He said the full line for Rothschild was buy if there's blood in the street, including your own.
Yeah. That's great.
Not the ticker, right?
Wow.
It's one thing to buy if you can sit on powder, but if you are taking an L yourself and you have the courage to go back in, I'm not saying I'm doing that because I am not doing that right now, but I just wanted to add that.
Yeah. Well, I think let's go more extreme philosophically on all of this stuff that trades at a multiple. I think there's a Morgan Housel quote that says this the most eloquently I've ever heard it said, which is valuation is a number today multiplied by a story about tomorrow. It's phenomenal, right?
That's brilliant.
Amazing writer, yeah.
Is that from his book? Or just like a tweet or something?
I don't know. I think it might be one of his old blog posts.
Nice.
But maybe in his book too. But anybody who isn't reading Morgan Housel, for 99% of people, Morgan Housel's guidance on money is a thing that you should read and just do that. That is investment advice.
Yeah.
For the first time on this podcast.
Yeah.
But anyway, amazing writer. But the idea that every single business asset thing that you're able to put capital against and speculate on has all of these contingencies that run into the future. And we talked about 6 months ago, the things that are very, very unlikely to become useless overnight are the things that grow slower, but generate a return more consistently, which we call, Trung did a really eloquent breakdown of value stocks versus growth stocks. I think maybe we even plug that in the description because that's great context too. And that explains the Berkshire Hathaway ARK investment, death cross that I think we brought it up last week.
Flippening.
Yeah, the flippening, just the hare and the tortoise, right? I think, but outside of that, all of these cycles and trends do tend to bring higher highs over time, right? The things that technology unlocks with time are just, things that will exist in 10 years that don't exist now, that we could never ever see coming, in the same way that if we rewound the clock 10 years today, and there's another great list somewhere like that. Before the financial crisis, the iPhone didn't exist, Spotify didn't exist, Uber didn't exist. All of these things that are now make up a massive part of our lives, and questioning how those things are valued. I don't think we'll ever have an answer for that, but it's more of a the collective psychology. People are shitting themselves right now, and that reflects in everything with a higher degree of speculation for the outside of, I think, even some NFTs to me have held up way better than I thought they would during what's happening right now. Any one outside of that ecosystem, I would imagine, would say that's all going to 10 cents, right? There's no way with what's the world is collapsing around you that you're hanging on to this JPEG that has, that's worth a couple $100,000, even if you could sell that at a decent, even if you could sell that at 2, 3, 4x, you would take it in a condition like this. And that's just not proven to be true. If you look at some of the high-end projects in NFT market, people are still hanging on to that stuff. So
what's the floor? You showed the floor price for boards?
Bored Apes now are they're over 100 right now, I think. Obviously,
so
Ethereum is not what it was.
ETH, you're saying
100 ETH.
Yeah,
I'm pretty sure. Oh. So that's still pushing $250,000. Yeah, 100.5. So 230 grand.
And what you're saying is if you're looking at the whole picture, you're this should be way lower, relative to everything else.
Well, I think that ecosystem is starting to like isolate itself. It is starting to decouple in some ways. More so, obviously, the crypto assets that are way more connected to institutions follow the behaviors of the traditional markets, the public markets, because everyone moving size is reallocating from across the board. Versus like JP Morgan is not like buying Bored Apes, right? So there's
not yet, Jack.
Or maybe they
Jack.
are. I think some people working at JP Morgan definitely are.
Yeah.
That's for sure. Like there's actually a few. I think there's 2 lads from Barclays in London that started like building a Bored Ape portfolio last year. It's a good story. We'll have to pull that
Were
up.
they at F1 Miami by any chance?
Were they wearing flower
Probably.
shirts by any chance?
Mate. I would imagine
Jack,
so.
I think what you mentioned there is kind of like for a long time, the pitch for even Bitcoin or crypto in general is that it's an uncorrelated asset.
Correct.
It's an inflation hedge, et cetera, et cetera. And what we're kind of seeing right now, anyway, in the last year or two, is it doesn't seem to be the case.
Quite correlated right now.
Very correlated to the Nasdaq for sure.
I think.
Go on.
Sorry, people are gonna like be probably thinking right now. NFTs are correlated to Ethereum, obviously, right? They have been whacked by this like loss of value out of the Ethereum ecosystem, no doubt. But to the extent I would have thought people would exit an asset like that if they thought we were going to like 2008 level recession, hasn't been the case.
Yeah.
But I think that also comes from like a different mentality of most of the participants in this ecosystem. It's like, I think we've covered this a lot on the pod, the idea that like traditional asset classes and traditional investment advice and like paths of wealth creation that were available to generations before, a lot of people that participate in the fringes of the ecosystem they aren't available to you in the same way. So there is this psychological barrier that's still there. Let's check out the cryptodes, boys.
Yeah, cryptos too. I was looking at it recently. I'm also, while you're pulling up, I'm just going to share a bonus meme of the week because we got this. This is really summarizing. Well, this is in the Telegram chat. Can you guys see the Telegram? Yeah. So if you're seeing the screen, the fear and greed index, which we've all seen before, we're on a negative 14 right now, all the way to McDonald's, and our very own Jack shared this as well. Diamond Hands Fry Cook at McDonald's.
The one you shared, Bilal, welcome, what was it say? Welcome back to work, Diamond Hands or something?
The one I wrote, well, I said steady lads, which was what Dotcom had said as well. But
Trung, did you send that one? It's like the three.
Said that. It's like, welcome back, Diamond Hands.
Oh, yeah. That was someone in.
Wait, hold on quickly.
Go on.
Let me add one point. So Sailor, I think that was the other thing running around.
Yeah.
Michael Sailor's average price Bitcoin buy of Bitcoin. I mean, Bitcoin is currently below his average buying price for MicroStrategy. But listen, Sailor ain't selling, boys. If you think
He's taking it all the way down. He's taking it all the way down, man.
He's here for 100 years, man. If you're building Manhattan, you want a piece of granite underneath Manhattan that is unmovable.
I think he has no choice by this point. He has no choice. I mean, he's all in. You can't. You kind of just gotta sink with the ship, even if it gets to that point. Jack, you were going to say something?
Yeah, I'm not going to say it very articulately because I haven't thought all the way through it. But you talked about like the level of conviction that people believe in Bitcoin have, and it's like
religious. It's like religious by this point.
Well, the outside, like the metrics that map it back to other assets are almost irrelevant at a certain point, right? They care about the percentage of the supply of Bitcoin that they own. But in the case of Sailor, I don't know the intricacies of it. He can get liquidated based on the money he borrowed to buy Bitcoin, right? Which is an entirely different scenario.
There's a risk of that. They've been talking about that, yeah.
Dude, I'm thinking about it now. It's insane it's actually wild what he did, right? Like,
isn't he using Bitcoin as collateral to buy Bitcoin? Yeah, essentially.
When people were like talking about the Elon Twitter deal, they're like, "Oh my God, Elon put a Tesla share to buy Twitter." It's like, let's step back and look what Sailor did.
Well, this is what everybody does. Like, this is like a real estate portfolio.
Yeah.
People buy one building, they refinance it, they get the cash, they buy another building, and then if the whole real estate market collapses, your portfolio is buggered, right?
Yeah, we've seen The Big Short where the stripper had 10 houses. Right.
Yeah. As always, just pure speculation over here. But I do think there's like, I'm kind of shocked or surprised by how well some of this stuff has held up, and because the NFT ecosystem in particular, I don't think every participant is valuing stuff in USD. Like outside of that's the one really interesting thing that the abstraction of NFTs did, is that like it really is like an Ethereum native economy versus like, as you guys were talking about stablecoins earlier, I think the primary function of stablecoin is like, it's a like safe haven for speculators. So you ride a trend up, you stick all your assets in stable coins, you wait for a price to dip, then you like dry powder, move in again. It's like it's that like ability to
disability
and time the market. Exactly. And that's I think like why there's such a high demand for it. And again, like 90% of the activity within the ecosystem is just this like move into this asset, move out of that asset, and Trung, you probably have some good anecdotes on this, but it's like the financialization of everything is more of the economy than goods and services, right? Just like the movement of money is just an absolutely obscene portion of GDP. And that's why like we have a podcast talking about basically moving numbers around on a screen. It's fucking stupid.
Well, all right, I don't know what the number was, but I think it's 10 to 15, maybe 20% of the economy at one point had reached this financialization. But
and the number of people that are participating in that relative to the percentage of the economy that it accounts for is small, right?
Yes, no, exactly. So
that's why we're not all living in the Hamptons, boys.
But I want to say this, because Jack, you mentioned it, and you've mentioned a number of episodes in a row now, or it's a bit of a theme for 2022. Jack is back to building. All right, so I gotta shout out to Jack's Visualize Value Twitter account.
Yeah, you've been killing the game with these, killing them.
You're on fire right now.
Thank you, boys. I appreciate that.
Listeners, if you're not following Visualize Value at Visualize Value, well, first of all, correct me if I'm wrong, but I believe Shopify CEO Toby Luckey recently retweeted one of your bangers.
There we go.
Thank you, Toby.
Well, actually, let's pull it up because it's very appropriate because he's been going after Wall Street analysts. He's been asking, we covered this briefly, but he's not too happy about the 70% drawdown in Shopify. And he's wondering if Wall Street analysts might have something like, if they're creating FUD around it. But Jack, you have the one that he retweeted.
Let's have a look.
Yeah, because it's the perfect one. It's not exactly the same as your famous one, but it's a similar idea, right? So Jack, tell the listeners what we're looking at.
So we're looking at a image captioned building versus betting, 2 charts. The first, if you're familiar with the this is pointless chart from Visualize Value, is it runs flat for 75% of the horizontal axis, and then it just starts to tick up exponentially. And on the right-hand side, you have a chart that is essentially, down, up a lot, down a lot, and a lot of variance from over time. So the idea,
at things on
that's
the screen
brilliant. Yeah, that's brilliant.
The idea exactly, moving numbers around versus like building e-commerce. I'm sure this is how. I'm putting words in Toby Luckey's mouth here, but like spending a decade building the infrastructure for people to start businesses is more of a value add to society than building derivative instruments of like shitty mortgages and like allocating capital between them back and forth until you blow up a bunch of people's futures.
That someone clip that, please. That was too good. And tag Toby in it as well, because I want to get confirmation that
I need to defend financialization a little bit. All right.
Come on then, Fiat fan.
Go, Fiat fan back in the game.
Finance fan, CFA, Trung Phan CFA. Let's hear it.
Well, I'm going to do one example, and then we can move on to the electric car things, because I just want to say this. I agree with Jack and Toby on this point. All I'm saying is that, financialization is like anything. It's like any innovation. It can be used for good or bad. Like the mortgage-backed security, what did that actually do? What was the genesis for that, right? It created a way for floods of money to enter the housing market. And yes, it ended terribly in 2008 because of how opaque and the type of instruments that were being built that just became recursive. Instrument on instrument on instrument, right? Like, and then CDO squared, like this, that, this. But the initial invention of it helped people buy homes in America, right? It was a way to find not cheap capital, but find capital that was accessible and maybe cheaper than if it was just a bank straight up lending. But the bank was able to unload it to another party, which it does in like trillions of dollars out of Fannie Mae and Freddie Mae, all these institutions in America. But
all the Warren Buffett companies, basically.
Yeah, it's just like that's what happens, right? It's like it got ugly, but at the core of it, there's some positivity. But that's it. I'm not defending financialization because it's a complete disaster.
I think just the idea of money as a product, people don't think about that. Right, like the ultimate product to sell is money, like the best margin in the world. And even just, this is actually something I'm working on right now, like how much it actually costs to borrow money. And people who, me included, have bought things with like financial agreements attached to them without really thinking about it, like just looking at a low number and being like, yeah, that seems reasonable. If you don't have a like deep financial education, the leverage that people that have capital have over you is so significant, and the ability to like compound that leverage using people who don't have leverage as a vehicle can get pretty savage, right? So anything that we could do to move the system away from that as a like standard behavior is a good thing, in my opinion.
We're back to European lefties here, mate. Here we go. Let's go.
I'm a crypto advocate over here. It's an incredibly complex thing, and I think the bigger thing outside of that, we're not going to fix that, is like people getting distracted from, including I think everybody on this call, from the things that you could be uniquely good at, the things that you can put into the world, the stuff that you can work on, the people you can work with, the things you can build that have a way more create way more long-lasting insurance over your future than the chart on the right-hand side that we just looked at.
That was a brilliant visualization for that reason, mate.
Amazing.
Good reminder.
Jack's
back in the game. Here we go.
Just new lessons been processed and coming into
the only thing I did want to pull up just to round out that last part was because we were talking about, I don't always love the way our boy Sean writes, but I think it was, he wrote this in his newsletter recently. I thought it was a nice take on times like this, beyond what I think Jack said about focusing on, your competitive advantage as a person, basically the first part, building stuff actually, and not worrying so much about the second part, but specifically as it relates to a time right now where we're all understandably distracted, or people are looking at that stuff, to kind of zoom out and say, like, this is the three things he said, the questions that he would ask himself. Did my belief change or just the price? Am I a tourist or a local? Tourists leave when the weather gets bad. Locals know the seasons change and know how to live with the weather cycles. Is it crashing or is everything on sale? I'm just bringing it back because I do want to say that I think that's a nice frame to balance it out, to say 100% I think people should be focused on, like we've said since the beginning of the podcast, what's your competitive advantage, your business, your job, or whatever, your own life. But at the same time, investing, as we all know, scales beyond yourself, and that's why we've all been doing it. And it's a nice way to zoom out and say, like, have things actually changed? And maybe that is beyond just your investments. It's actually just your the way you're spending your time. Like, should I be spending all this time looking at chart all day, or should I be building stuff the way Jack has just talked about?
Well, like Jack said,
you're compounding your losses exponentially by wasting your fucking time looking at it.
Yeah, that's a great way to put it. Exactly. All right. Anyway, boys, let's wrap this up with a nice friendly chat on electric cars, talking about the future. Jack, how's the new car? How's the whip, mate? You've been busting some Rick Ross in it. Yeah, what's going on? What's the first song you played in the car? We have to get
I've
that
got
out of the way.
The new Jack Harlow, Drake.
Woo, here we go.
Churchill Downs, man. Great
Did you see those two at the Kentucky Derby? They were lit, bro.
Jack Harlow. What's the controversy around him? Why am I seeing his name everywhere?
But he's got the number one. Bro, you're going to love this guy, man. He's No. He's like this white rapper he's white, right? He's a Caucasian guy, but he's a
Louisville.
very charming guy. And his that song, the Gwen Stefani sample, what's it called?
No, it's
First
not Gwen
Class.
Stefani. Fergie.
No. Fergie. Yeah,
okay,
you're
I'm
right.
going to listen to Churchill Downs. All right, after. Okay, got it.
Here we go. Trunk, not on the new music.
You're pushing Churchill Downs into Porsche Taycan. So first of all, why do you have this as a loaner car? Is your car in the shop, or what's going on here?
Yeah, just getting a little service. So I think this is a essential marketing expense for Porsche. They're giving out the electric vehicles as loaners. Try and I don't know what the economics of it are, but probably some EU directive that says they have to sell X amount of electric vehicles over the next number of years. So they're trying to, seed that behavior.
Well, I think that's such a great point. I took my Tesla in the shop. I had a full battery replacement 6 months ago. They gave me a Model X.
You only just bought it, didn't you?
Yeah, bro. So
Jesus, no.
I just bought a Tesla in November 2020. We joked about it. This was after Elon replied to that tweet the first time, and I'm like, this is just a good coffee table story.
It's the most ridiculous reason to buy a car. It's the most amazing reason, but also insane. And I just love that it's 100% true.
Wait, hold on. Let me frame it. For the listeners, like, wow, this guy is a total knob reply guy. The lease was coming up on my Mazda CX-3, okay?
Okay.
And we were going to get a new car anyways. All right, so basically we were going to look at a CX-5. Great car, by the way. A Mazda CX-5. For any listeners that are unsure what vehicle they want.
That is investment advice from Trung.
It is, right? It's a great car, man, the CX-5. But lease was coming up. I'm like, this would be a good story that I could tell on a podcast that I haven't started one day and these guys can laugh at me. But so like a year later, probably call it a year after I bought
Model 3 you got right, Trung?
Model 3, yeah. So just the super basic. And I got super lucky though in the sense of, obviously all car prices have gone to the roof, but I think I bought it a year later because of the production difficulties, like 15,000 more. So I got it right before like this boost. But yeah, I think to your point, I never thought about loaners as a marketing expense until they gave me a Model X when they were ripping out the battery in my car. I'm like, I see what you're doing here. You're giving me a taste. You're giving me a taste of the
good life,
larger size.
It's that Costco tactic, man. When you're going around, they give you the little Nutella on the croissant, and you're like, okay, I'm getting 24 of these. Bring it home.
Let's do this. So, Jack, I know nothing about cars. You are a car fanatic. Could you pepper me with questions about my Model 3? Because I wouldn't even know what to ask you. So, like, what would you ask somebody driving a Model 3 if you wanted to make a decision on whether or not to buy one? Like, what are you asking?
Well, I think is unique about Tesla and why it's been successful wildly successful as a business. It's just, you don't really need to ask a question. Like, you just go in it. Like, if you drive it or you sit in it, you're just like, this is different than combustion engine car experience, right? I
could record a video in the front seat here. That's what you think.
There you go.
Front seat fan vibe.
And they're not it's almost like a different category of product. Like, you're not like you said, you're just like, for whatever reason, you're captivated by it and you like try it out for novelty reasons. But I don't know how often you switch back to a normal car, but what do you notice when you go back to a normal car from a Tesla?
Okay,
That's
so,
maybe a good question.
First of all, I love how you described it because that was my legit first feeling. I'm like, this is nothing like I've ever experienced before. There's just a big ass screen there. It is an incredibly smooth ride. Like, it's just like, this is totally different. They do the whole regenerative braking thing. So that's the biggest difference, right? Is a car will roll, like a normal ICE car will roll in the combustion engine. But this car, because it had regenerative braking on, it doesn't roll at all, right? So like its default is at a stop. That's the only difference, like as driving. But like everything else, you're like, this is like, if you're building a car from the ground, this is what it feels like, right? In 2020 or 2015, I guess, when they started rolling out Model 3, maybe 2018. But like, yeah, I know nothing about cars. I just know what I used to drive, and I really enjoy this experience. Now, the one thing that has come up is the range anxiety. I can't do 300-400 kilometer trips. It's just the build out network in Vancouver is just not big enough of power of the superchargers. Because superchargers, 25 minutes fully charged, right? At home,
what's your range on that, on the 3?
It's supposed to be 400 kilometers.
Which is about 250 miles or something?
Yeah. If I had got the upgraded battery, I think it's 550. And the place I want to go in BC is about 4 hours away. It's like, we haven't gone there. Like, it's like, I'm just not ready to do that. But yeah, that's it. That's my experience. That's my takeaway. So like, you've driven a Tesla, yes?
Yeah.
Okay. Yeah. How does that compare to the Taycan? Like, what is that like? I
just think the interior finish in the Porsche is nicer. Like German interior, like German car interiors, you cannot beat that. But the Teslas are nice. I like the Tesla. It's a little like, the first time I went, I was like, this is a little like clinical feeling for me. Like, it's almost like, and I'm a minimalist, but it was just almost too much. But then that was a couple of years ago now. Now, like, just having driven this thing around for a couple of days, there's something about like even the like linear power delivery of it, like it's way faster off the line. If you're driving in the city, it's just like you want to get out of a road quickly down across the street. It just like zips over without the like, you know, gear changing and the like loud. And I'm like, I never thought that I would be interested in owning an electric car, but I think for like a family car, I definitely would. Like a everyday driver car, I definitely would.
In city, and then cars at home, all that, right?
Yeah, like anything else would be a hobby thing, you know, like if you liked vintage cars or sport car or something like that. It's like that feels like it's almost going into this category of like, you know, just a hobby or a weekend thing versus like a clearly superior thing for just like living on a daily basis. Like the quiet, like the sound is really good. Just no sound is very odd to begin with. Also, as a homeowner, more electric vehicles, just for my own personal noise pollution reduction, that's got me started thinking about that. You know, you get the like Camaro going past at like 11 o'clock at night. It's like, we don't need to be doing this anymore. And this coming from a car person.
Yeah, that's Jack, homeowner and dad.
Exactly.
Jack, we've got to ask you a quick question just to round it off here. The most memorable car from your younger years for both of you, and because I know you must have some ridiculous ones with a massive spoiler, playing some insane music, like a speaker in the back where you can't even fit the groceries in. Like, just curious, because since we're talking about cars, I want to get that from you.
Let me pull up a screen share because you're not going to believe it without.
Oh boy, here we go. I'm glad I asked this question already.
That's a great question. Bilal, you're obviously going to have to answer yourself.
Oh yeah, I'll answer while you. Oh wait a minute.
Bilal's going to have seen these before, but Trung, I'll be surprised if you've ever laid eyes on a vehicle like this in your life. This is not. This is a. You ready, boys?
Oh my God, what a legendary.
You were pushing a Fiat Cinquecento Mac?
The original Fiat Jack. Here we go.
Oh my goodness, bro.
You know how much this cost? £200.
No.
Yeah, so that's like $300. Yeah. Sold it for 500. Flipped it for a 1.5X.
an appreciating asset if there ever was one.
It was, mate. Yeah, I got the old 6x9s in the back. No exterior modifications. Below.
You talking about you got the rims going? You got the spinning rims from Pimp My Ride 2004?
I couldn't reallocate. That's bad use of capital.
Did you have the little CD packet in the CD thing in the side? Burn CDs.
The clip off face.
Just
on the
so someone didn't jack your jacket when you went to the
mate.
To Tesco's, killing it.
Yeah, I do one other one for you boys.
Why are you putting out Trung? What about you, mate? What do you remember your first car? Ford Mondeo. Here we go. Wait. Let's wait for that answer because here we go. Look at this classic. I'm pretty sure my uncle had one of these.
Well, let me.
Mate. It was my mum's car. I got it as a little hand-me-down.
Jack, pull this up for me.
Absolutely no swagger in my car history whatsoever.
Well, dude, here, Jack, pull up two cars for me. Pull me up a 2000 Toyota Corolla.
Oh, that's a classic. That's a classic, mate.
I was
very
pushing,
economical.
Pushing my parents.
Oh, look at that.
Oh, yeah.
Did you have a thing in the back with tissues, like a little decorative box?
This and a Civic were the most stolen cars, obviously, because they were full widespread in Vancouver at the time. And then give me this. Trung Phan 2007 Mini Cooper.
Oh, all right.
Yeah, he stuck a $35,000 lease onto his mom.
Look at that, living the good life, son.
Dude, you were talking about asshole newly graduated 22-year-old Trung. Like, Mom, just a total fucking asshole, right? Mom, I want a Mini Cooper. Well, what are you talking about? You want a Mini Cooper? I'm like, listen, I'll split the payments with you. Except 6 months into paying it, I split off to Vietnam. So she shoulders the rest of it. Dude, I'm going to hell for that one, man.
You know how many Cinquecentos you could buy for $35,000?
All right, last one, Jack.
70.
My one was a Toyota Yaris. Don't laugh.
Oh, I know you are.
Toyota Yaris. Oh, I can't remember, man. It was probably 2000 and early 2000s.
You get on that one? Oh my goodness, dude.
This one, look at that. The one on the left.
Looking dangerous. Yeah.
Looking like an absolute gangster in this one. It was my mum's car, to be fair. But it was one of those that didn't even have power steering. So to park this anywhere was absolute mess. You just couldn't do it.
You had to have the emergency brake, bro. Pull that brake up.
Oh yeah, that was it. That's why I do not drive anymore. But oh man, all right, good chat, boys. I still the first song, no diggity for me. That was the first song. Dropped it. Felt like a gangster for 3 months. Played the same song on repeat, and then never drove again. Pretty much. I haven't driven in America, man. I've been there 9-10 years. I've never driven there.
Unreal, dude.
Insane. I've got a license. I just don't have a real need. I'm in New York, mate.
Why did you put that Google money to use?
Yeah, I've been wasting it all in the fucking stock market, mate. So to bring it all full circle. All right, boys. So I think we can call it here. Great chat. And thanks for explaining all of that, boys. And I hope you enjoyed that. If you're listening to us still, do us a favor, smash the like button on YouTube. We need to ask that earlier, right in the beginning of the show. But if you're listening to this, even click the link on YouTube in the show notes and smash the like button. That helps us out. Share this with a friend, share this with your group chat, and let us know what you think of this one. And we will see you on the next one. Cheers.
I got an idea, Trung. You should do a reaction video to Churchill Downs. First time you hear it.
Yes, we'll do it for the...
all right, we'll put it in the Telegram or something.
I'll save it for the next app. I won't even listen.
No, listen to it. You're going to hear it on the radio, though, unfortunately, mate.
No. I don't play radio, dude. I listen to Cocomelon in the car.
All right, we'll see you next week. Cheers, boys.
Peace.
Have a good one.
Peace out.